Now I will explain about inventory substantive audit procedures. There are three types of substantive procedures, which are analytical procedures, test of details of transactions, and test of details of balance. For analytical procedures, usually we will compare the inventory value such as the raw materials, work in process, and ending inventory for this year with the values of previous years. We need to see whether is there any significant changes in the amounts. Next, we will compute the inventory turnover ratio and compare the ratio for this year with the ratio of previous year. Thirdly, we need to determine the ratio and trends for gross profit. We need to compare the gross profit margin for this year with previous year. If there is unusual changes in the amount, then there is a possibility of material misstatement. Next is test of details of transaction. We need to perform cut-off test. During this test, we will focus on the movement of inventory. We need to do document inspection to verify the dates of inventory received from the suppliers, and also inventory sent out to the customers. We also need to test the receiving and shipping transaction. Next is test of details of balance. We need to observe the stock take and make test counts. We need to observe how our client do the stock take, how they count the inventory, and how they do the procedure. This will help us to understand the condition of the inventory and also the quantity of the inventory. This will help us to place reliance on the management assertion. As an auditor, we also need to count the inventory ourselves and compare the values with the values get by the clients. Next is testing pricing of inventory. There are different methods of pricing. For example, if the client use pricing at cost method, such as FIFO or weighted average method, then the client need to use the method consistently. And we also need to examine the purchase price to see it whether it's the same with the price stated on the supplier's invoice. If the client is using net realizable value method, then we need to use other procedure to test it. Next is confirmation from third parties and examine consignment agreements or contracts. If our clients has some inventories outside their company, means it is placed outside of their company, then we need to confirm with the third parties regarding the existence of these inventories. If the client has goods on consignment, we also need to confirm with the third party. This is to avoid the client from recording the goods on consignment in the year-end inventory record. Now I will explain about audit procedure. First is cut-off analysis. Okay, and in this cut-off analysis, it is usually done to make sure that the accounting records is recorded at the correct period. For example, if the goods we are going to receive on next year January, then we cannot record it in this year. And if we also need to make sure the movement of inventory is correct. For example, the movement into inventory is classified as receiving, and the movement out of inventory is classified as shipping. Next is observing the physical inventory count. We need to observe how the client do the stock count and how they do the whole procedure. And we also need to count the inventory ourselves and compare the value with the value of clients. And we also need to focus on the inventory with high value. Third is reconcile the inventory count to general ledger. We need to compare the value, get the value from the inventory count to the value recorded in the general ledger. We need to trace the value. This is very important because the value need to be accurately and completely recorded in the ledger. Next is test high value items. If there is any inventories with high values, we need to count again the inventory. Test error prone item. If we found out that there's an error train in previous year for specific inventory, then we need to test the item again for this year to avoid the error happen again. Test inventory in transit. Inventory in transit is the inventory out of the warehouse but haven't reached the hand of the buyer. If we are doing the stock count and there's any inventory in transit, this will cause a high risk to the company. Next, we need to review freight cost. Actually, freight cost is the shipping cost. We need to review freight cost by tracing a selection of freight invoice to see clients' accounting treatment on this freight cost. There are two ways of accounting for this freight cost. We can include it in the inventory, or we can record it as expense. Finished goods cost analysis. If the finished goods occupy a large part of the inventory valuation, we need to review the bills of materials. We need to see what types of materials you use in this finished good and the cost it incurs on these materials. Lastly is inventory layers. For example, if our clients use a FIFO method, then they should keep the new inventory and include the old inventory in the cost of goods. So if our client use LIFO method, then they should keep the old inventory and include the new inventory in the cost of goods. So if our client is using a perpetual method, then they need to compute the amount of the price tag of the cost of goods sold and use that amount to deduce it to the the value of the finished goods inventory. If our client is using a periodic method, then we need to compute the value of the price tag of the in the ending inventory, and we need to use that to reduce the cost of goods sold. Okay, next is current issues. As we all know very well, the current issues now is COVID-19. The whole world and the people is affected by COVID-19. Business also is affected by COVID-19, and the audit procedures is also affected by COVID-19. Okay, the management does not conduct an inventory count on the balance sheet date. This is because the government imposed lockdown, so the warehouse is closed and the people need to stay at the home, so they cannot the management cannot conduct the inventory count. so they need to um inform their auditor regarding this matter. Okay, next is physical inventory conducted at a date other than the date of financial statement. The changes in the inventory between the date of financial statement and the date of count is very crucial. The entity need to ensure the effectiveness of the design and implementation of controls over the changes in these inventories to determine whether the uh, date of stock count other than the date of financial statement is um, appropriate for the audit procedure. Last is impracticable for an auditor to attend physical count as the government imposed lockdown, so the auditor also cannot go to the warehouse to count the stock. So they need to perform other alternative audit procedure to collect the evidence. In conclusion, the entity should place internal control system over the inventory because asset occupies a large part of the inventory of the sorry because inventory occupies a large part of the asset, and the inventory usually is very valuable, so the company need to take good care of this inventory. And if the company have a good internal